All right, traders, welcome to today's end of day video. It is Friday. No, I'm just kidding. It's Thursday, November 29th. And what do we do for the averages here? IWM, I'm just looking at that one because it's on my screen in front of me. Down 27 basis points. The Qs finished down on the day. So we actually had a red day. SPYs finished down 22 basis points as well. But, after yesterday's big move up, I think digestion is probably what's in the cards usually after that. And a little bit of sideways moves. We had, if you look at the distribution of sectors, you had some sectors down pretty decently, I guess. XLK was down 1%. The Chinese Internet ETF was down a little bit more. Metals and mining was down. Retail was down. But you look at some other areas, energy was up. Healthcare was a big outperformer today on a couple different groups. Not huge outperformance, but I'm going to talk about healthcare in a minute. I'm looking also at the IBD 50, which is a lot of growth names that was up on the day. So these are actually days. I mean, yesterday was the huge day, obviously, but days like this, I'm perfectly content with when the market is basically flat because I don't know. I always feel that I'm pretty good picking stocks and pretty good picking up where the momentum is in the market. So just like I've been starting the last couple nights videos, I've been starting with the names that reported earnings. Splunk had good numbers. I think they have their earnings call. I did play this one for earnings. I made a boo-boo, and I'm happy to kind of share the mistakes so that you guys can learn. These are somewhat learning videos too as well. When you buy call, when you do for most 90% of my earnings trades are call spreads or selling premium, selling put spreads. And I decided not to sell a put spread on this one to collect premium. I wanted to play this one to the upside, and I bought a call outright. And the reason why I wanted to do that is because when you do that, when you buy a call spread, you can't really hedge after hours because you're limited, right? If you sell shares against a call spread and the stock ends up blowing out to the upside, you're capped at your upside, so it's not a hedge. But if you're long calls, you could beta hedge, right? Or excuse me, delta hedge, which is what I was looking to do in Splunk. It's actually moving up here a little bit, which is nice. But I just did not have an order out at 110. So it was kind of a rookie mistake, I would say, to do this because I was long calls, and what I wanted to do was sell shares against it. And I couldn't get 110. I was trying to get 109. I could not get it. Maybe I'll be all right here with the stock moving up here. But it's a really nice trade to be able to do when you're playing earnings, to be able to do that delta hedge. In this way, because what happens is if you happen to sell shares at 110 or let's say 109, you could always buy them back when the stock does this, right? And you could get rid of your hedge, and then you're outright long the call again. So you have that all kinds of flexibility after hours because it's fun if you if you do this trade properly, you could really make some money back and forth. If you don't do that, if you're just sitting outright long, calls and you don't know this technique, you're sometimes leaving a lot of money on the table. What I did was, of course, I'm managing a trading room too, and making sure that I give everybody the numbers, but I forgot to put out an order, and by the time I try to sell some shares, it had moved very quickly. So, again, good to realize what you can and what you can't do. I'll go through the rest of the names, and then we'll talk about a little bit of strategy for the day. Workday, I think, was the real nice mover. Again, some of these enterprise and application software names, since Salesforce reported. Well, there was a couple last week that actually reported. Autodesk, which saw some calls today. I want to talk about that order today too, and Autodesk, and just a little bit about technique. So let's go ahead and look at the averages. I mentioned that it was kind of a fun day to trade, with these headlines that we're getting. We're just in this environment of, headlines moving the market, and you can take advantage of that too. If there's a negative headline out there and it's not really new information, but just the tape is reacting to it, could end up being a buying opportunity. So what do I see? So for the S&P chart, obviously I've got a lot of moving average. A lot of indicators on my charts. I know this looks busy to you, but I use them. I use the moving averages, and I use the value areas pretty well. By the way, look at how well the value area worked for this month. That's as far as we went, by the way, in the beginning of November, and then all the way to the bottom. We had this one close below value, but we came right back in. But this is why I have value areas on my and this is the Web the Goal value indicator market webs that he designed specifically for this. But man, they work so well, giving you a nice signal from top to bottom here for the whole month. Price completely inside value. So at this point, you can see that I do have this dotted line now drawn, which I haven't had on my charts. Why do I have this drawn in here? Well, of course, we have this G20 meeting. I do not want much risk into this meeting. I just don't see the point. I think that there are trades that you could put together. I'm going to talk about a couple trades or a couple trades that happened that I saw on the tape today that I think were definitely G20 type trades. But is this an unknown risk where I want to be unhedged or a really big portfolio? No, I would rather not, right? I mean, I do very well with on the day-to-day action, picking out what areas are trending. I always think that I'm a little bit ahead of the crowd with, picking out which groups are trending versus others. I'll talk about healthcare in that capacity. But so I don't need to really have a big event risk and to kind of gamble on what's going to happen because this is unpredictable stuff, right? I mean, not to be, again, as I said in the midday video, not to be political, but you kind of have to realize, I mean, I don't know what Trump's going to do if he's going to be, want to get a trade done deal. I would think that he does because he's so sensitive about what the market does. If he makes progress on a deal, it's going to cause the market to go up, right? So that's what he likes. But who knows? It's very unpredictable. Do I want to have some type of trade in place for the event? Yeah, sure. Something where the risk, very important risk to reward is defined pretty well. So this is what I see for the S&P. Does it mean that the S&P is going to stop here just because I have a trend line drawn here? No, it just kind of tells me that it's probably a good place to, and I've said this, you've heard me say this, but to kind of, make sure that you're taking targets and to have a little bit smaller of a portfolio, realizing that we've come pretty far pretty fast. Could we go through the 200? Sure, absolutely. I don't have a crystal ball, and I hope you don't think that I do. But I think just from a risk perspective, hey, we've had a real nice rally. I'm not getting greedy, personally. Right, and this is what the Qs look like too. Kind of the same thing. I've got a trend line drawn in here. I mean, I don't think out of the realm of possibilities is that we go sideways for a bit. Again, that's perfectly fine. I feel like I can make money in a sideways market. Some things in a sideways market are going to trend up. Some are going to trend down. So don't try to, outplay this, outgame it. Be smart. And that's bottom line. And again, I'm not giving any recommendations, anything like that. This is videos for information purposes only. So please, take it for what it is. But so let me go through a couple areas. Let me talk a little bit about healthcare because that's where I've been trading the last couple days. I put on a nice XLV trade yesterday. This has had some momentum to it, even though it did not close on the highs. Still closed above value. It closed above here. I don't have a trend line drawn in here, but you could probably draw something in here. I've also been talking about Pfizer for a while. Pfizer, I was able to take 2 targets on a trade that I started last night and added to it this morning, and that looks really great. A couple other people brought a couple other names to my attention. Look at Lilly also breaking out to a 52-week highs. Merck has been unreal out to a 52-week high as well. So, all these names, so just because I love this move in Pfizer, I don't know what Pfizer is going to do tomorrow. So I take profits on a name that's, on a day where it's up much more than it usually is, up 1.3%. And the beauty, before I move on and out of healthcare, again, when I talk about risk to reward, XLV is really nice because the options are super cheap. I know it seems like everybody wants to play with the sexy growth names, but if you look at the implied volatility of the healthcare ETF, I mean, it's a lot, in my opinion, it's a lot easier to make money trading options and things like this. Options, let's see. Let's just say for the December options or January options, the implied volatility is a 16, a 1-6, right? Look at what's one. If you want to look at, I always like to do this. I always like to bring up Amazon. Amazon, the implied volatility for January options is a 35, so it's about half as cheap. Now, of course, it doesn't move like Amazon, but if you catch it right, and it happens to have a couple outside days moves, you have great risk to return in something like this where the implied volatility is so cheap. So it's a very important concept in options, and it's doing very well for me. Okay, so that's that. That's what I think where there was momentum. Talk a little bit about today's option activity. There was definitely, I think, speculation like on a name like Hua. This is another China name, small cap name. Somebody's buying next week's calls in Hua. So, why would they be doing that going out to December 7th? What do you think? There's a big meeting with China. Is this a good risk to reward situation? So let's look. Let me bring up one other application as well. I think they spent 90 cents for these. Sorry. And I want all trades because this may not have been swept. I think it was a big block trade. It was 6,000 of these that went up. All right, so this is a pretty decent sized trade. It's about over $500,000 in trade. The implied volatility did move up when they purchased this trade. So again, they're only going out to December 6th. So what do they spend? 90 cents for this? The implied volatility is a lot. It's 85%. I was just talking about XLV, which is a 16%. All right, but so what was the strike that they bought on these? What did I say? 16 and a half. So I guess they're actually right at the money in these. So 90 cents. And for these short-term type trades, you have to be willing to lose the whole premium. Something short-dated, binary event. But if something does happen with China, I would think that these calls will make money. Again, I don't know that, but now if nothing happens, if it's a non-event, then you'll probably lose the 90 cents. But yeah, I mean that's something. There was also some IQ that was traded as well. Same concept, right? Same trade. Would I put two trades on here? No. I would personally pick and say okay, because they also bought next week's IQ, which I believe was a buy. I don't know for sure. I'm not the one who did the trade, but they also traded a whole bunch of December 7th 19 calls. Same thing, right at the money. Now, who knows? They could also be selling these to collect the premium because the premium is so high. But I mean, I would honestly look to give it a shot in one of those names. But so again, that's how I would define it. I would not have the rest of my a lot of risk carrying into that week. So that's my own personal strategy. And then just to kind of see how it goes for next week. Again, have some trades out there, but I'm going to be pretty thin. I think going into the weekend, personally. But I will have a couple of these catalyst trades on. Wow, looks like I'm getting filled in Splunk. Perfect. So what else traded today? Oh, there's a couple of sorry, I'm bouncing around. I don't have a script, obviously. Autodesk, right? Real nice trade, had earnings in probably the worst of conditions, right? Poor timing for these guys reporting earnings last week. And so sorry, I'm just tracking my portfolio because I do see I'm getting filled in some Splunk here after hours. But if we go to this Autodesk order, ADSK, and I want to look up just sweeps. this is our Option X program, which you can buy. You can get access to this. This is our homemade program that gives you access to the most aggressive trades out there. So look at this order here in Autodesk, right? This is in April. They're going all the way out to April. It's got some it's a decent order. It's 367,000, just 400 contracts. But for Autodesk, the cost of these was $8.60. So for me, what I do with these trades, right? Autodesk was up, I think right around the highs of the day when this one came up. I will wait. I'll file this one away. I did not purchase this, and if we happen to get an inside day, or something where the market does by chance sell off in the beginning of next week, I could say, hey, I could maybe get this Autodesk trade for a lot cheaper than what they traded on the tape. So that's part of the game. Is for me is not chasing. After 3 or 4 green days, to kind of sit and wait and remember that there was an April call buyer and just realize I could always come back to that. Another name that just is something that I'm watching too, because I sent out a chart on Home Depot earlier in the week. Did I get in it? No. But I still think that there's nice support here. Maybe watch this weekly candle to see if it gets above that. But also I don't want to chase. So I did not add this today just because I really don't want to be adding too many trades at this point. But this is a trade that I will probably look at for next week because I think it's still pretty depressed at this point. All right, so that's it. I think the video is about 16 minutes long. I'm not going to go over all of today's option activity. If you're a member of Tribeca Trade Group, you'll get that. By the way, check us out at TribecaTradeGroup.com. It's just $7.99 for the first week. The last couple weeks, we've been really strategic and have been just obviously doing very well with the market, how it's doing. But all along, I think we've been doing a great job at analyzing the market and being smart and strategic the last couple weeks, last couple months. All right, guys, thanks for watching. Have a great night. See you tomorrow.